Welcome back to another episode of our Raising the Brand series here at Private Equity Marketeer, where we delve into the stories and strategies behind the leading brand builders and capital raisers in private markets. I'm Matt Curtolo, longtime LP, now LP and GP advisor and advisory council member here at Private Equity Marketeer. Today's a real treat. I'm joined by someone I've gotten to know over the last several years, a true master of the art of relationship building, Kathryn Pothier. Kathryn is a partner at Epiris, a UK-based buyout firm focused on business transformations of mid-market companies in complex situations. She is also a member of Private Equity Marketeer's Advisory Council. And aside from her decade plus of IR and business development experience, Kathryn brings one of the most interdisciplinary journeys in the industry, from classically trained pianist, a double major in Chinese, and a master's in international relations. So at Epiris, she leads all of the firm's investor relations, fundraising, marketing, and communications activities, which is no small task. So we are excited to dive into her path, her philosophy on relationship building, and her view on what's next for IR. So with that, welcome, Kathryn.
Thank you so much, Matt. As always, it's such a pleasure, and I'm so grateful to be part of this community.
Absolutely. Well, we will dive right in. So your path into private equity, as we said, is far from linear. Piano, Chinese studies, international relations. I would love for you to just talk a little bit about how these different disciplines shape the way you think about your role today, communications, listening, and building trust with LPs.
Yes, you hit on it in terms of the link from background to what the essential skills of any IR professional is. But I think many of my skills can be traced back specifically to my training as a pianist. I think that's because from an early age, I saw that it was possible to communicate a story without using words. And not only was it possible, but it could be profoundly moving to experience that. And I think that taught me to watch for nonverbal cues in social settings. It heightened my EQ. It taught me how to be really thoughtful in how I convey a message, whether that's using conventional words or not. And then extending that into, studying Chinese, applying international relations theory to real world situations has been very much an extension of my learning how to communicate with others, and particularly how to communicate with others who don't share the same cultural background as me, who might come from a different place in terms of philosophy and thought, or who might simply be sitting on the other side of the same table, and how to appreciate that. Where does someone else come from? I think those are all essential pieces of what, in my opinion, makes an effective IR professional. How do you show someone you care about what they have to say? How comfortable are you absorbing nonverbal cues that you are given? How do you handle stress and real-time reaction requirements? How comfortable are you speaking in front of a crowd? How do you translate lots of incoming data points into a compelling story that is worth telling? And all of that in a way that still also makes it possible to build effective relationships, which are genuine and authentic and not just transactional, as we all know the feeling of on the converse.
I will say that is one of the things, looking across my industry experience, people who come from different backgrounds, and it can be, I think, just the diversity of experiences enriches your ability to, as you said, to listen, to communicate, to be empathetic, to be authentic. These are words that get thrown around a lot, but I think if you were, and this is not to say anything negative about people who follow a more traditional path, but I think with those diverse experiences, you end up with just a much richer tapestry of ways to communicate and interact with folks. So I love that experience and how you just framed that, for sure.
Absolutely. Yeah. And I think most people's paths are not really linear, and there's something delightful about that. So how you get comfort in the non-black and white of the world is pretty essential.
Absolutely. Well, and maybe as we talk a little bit more about your experience, so you worked in BD and IR roles in both hedge funds and private equity. So I'd be curious, given the asset class exposure you've had, what are sort of the biggest crossover or cross-asset lessons that you've carried into your work at Epiris?
I think we are actually in the midst of a pretty seismic shift in the very nature of IR right now. And that is, we have been evolving from a position in time where being an excellent facilitator of relationships or a great conduit for introductions and relationships to have the opportunity to flourish was the key to success early days IR. We've moved from that into, I think, a point in time where now the best people I look up to and admire in IR are the ones who can demonstrate they have the true depth of knowledge and expertise to be a go-to for the investor on the other side, to know that they can come to that person with all the information, all the questions, no matter how detailed, and to be really, really great at IR now. It's not enough just to say, well, I know the people at XYZ organization, let me make an introduction. It needs to be, I've proven that I can build the trust for that organization and the team of people supporting it, so they know that they can come to me and get everything they need. Where you are much more fluidly, therefore, the seat in between corporate staff structure, investment team structure, you do both. You have to. And I think that's today's world of a great IR professional speaking the language of both.
It is very true, and the evolution for sure in today's market. I always know, and as an LP, and you and I have talked about this in the past, I don't want to have to go through many layers to get to the answers that I need. The more that my primary point of contact, the more I can reach out to you and you can give me in a one-to-one basis, builds trust, builds that authentic relationship. And, that's going to compound over time. So I think that is a big piece of it as well. I'm curious, maybe putting another layer on it, private markets versus hedge funds, right? Thinking about how much time you get or the length of those asset classes. Hedge funds generally a bit more opaque, but a bit more rapid in terms of the information flow, monthly reporting. People can kind of watch and understand what their positions are and may have reactions to that cause them to reach out in different ways than maybe in private markets where you have quarterly marks and maybe a little bit longer of a time horizon. How do you kind of think about that? And maybe it's more like a cadence of communication question.
Yes, I think the best communications are ones, and we might come on to this with more of the conversation as we go, but one of the ways I think of this, and that we link it to a phrase internally, which is focused transparency. This idea that you need to be able to deliver a message when it needs to be delivered, not after, and it needs to convey the true essence of what you need to get across. And it needs to be really straightforward, really honest, and forthcoming with that, which is especially important if something has gone sideways or something unexpected has happened. But it's equally important when things are going well, so that you're being proactive about sharing that too. So that focused transparency piece speaks a little bit to the cadence of communications, because I think doing it well means doing it often, and also doing it meaningfully, so that you're not the one kind of sending vapid messages landing in someone's inbox on the other side where they've got 1,000 others to look at. Yes. But equally, you aren't going radio silent for 6 months when they actually need to know what's going on in your portfolio. So I think what's interesting, though, when you point out hedge fund versus private equity, is the liquidity of illiquid asset classes is sort of changing. And that's coming around with the blend of retail capital and the ways this is making its way into what we historically had a lot more segmentation of. And so even though the cadence of actual valuations and marks, and therefore some of the redemption rights within a hedge fund might be different from a 10 plus 2-year closed end private equity fund, actually the nature of the conversations is blending more of it together than it ever has, because you've now got these retail channels coming into private equity, and a lot of that mindset is different from maybe the prototypical PE investor of the past few decades. And so we as IR professionals, if you have multiple of those things to manage, it becomes more difficult because you've got now multiple product lines or strategies or things that you have to sort of marry together, and sometimes crossover of those investors. in our case, one flagship product, one strategy is a lot more streamlined from that regard. And we have a pretty concentrated base of LPs, and that makes it a lot easier on the one hand for managing those communications. But you still have to be thinking about what's topical for them and what are they seeing in the rest of their portfolio, because even though they're not seeing it from me, they might be seeing it elsewhere. And we need to be equally knowledgeable about that, because that's what creates challenges like the denominator effect or the liquidity squeeze that everybody talks about now with the drive for DPI, because they're not getting it everywhere else they need to. So just being aware of that simply across asset classes is really important. So you're not the horse with blinders on,
Yeah.
not realizing how much is actually impacting them.
You used a word there too, proactive, I think is a way to put a bow on it, because you want to be anticipatory of what LPs may ask, which goes to your point of being knowledgeable about everything that's going on in the industry, even if it's not directly impacting that. That builds the trust, and that's really a key factor in terms of being able to execute your job well. I'm curious, we were going to pivot into a little bit more about the IR function, and as I introduced you, there's a lot of capabilities that you're responsible for within the firm. So, as you think about IR, fundraising, marketing, communications, how do you think about those different areas converging across the industry, and maybe what does a modern IR look like for you?
I love this question because I think, again, the best IR professionals I know and admire are the ones who are both serving and innovating at the same time. So they're sort of fulfilling the role of what we're here to do is make sure that we are providing top-notch service to our investors, but also to our team, to our firm. And to do that, we need to be, again, deeply knowledgeable about what it is that those constituencies need and require, and provide that to them very proactively. But the innovation side of it is where I think you have a real opportunity, because in IR, there isn't one template of how to do IR well, how to build the right IR team. It might look very different, one organization to the next, and that's okay. What I think is the most important lens to take to that as the role continues to evolve, and as you have the more athlete type IR that has to do multiple pieces versus the product specialist IR that needs to be really laser focused at the deepest depths of expertise on something specific. What I think really this comes down to is the value that the firm places on what IR brings to the table. And so it doesn't matter if you build a team of 1 or a team of 10, if you view IR as always and forever on the periphery of driving value for the firm. Whereas if you really push that into the innermost circle of the components that make the firm work, we all have our functions and our roles to play. And I would obviously argue that IR is a pretty central one of those. The firms who recognize that are the ones that are continuing to grow well. And that doesn't mean grow the fastest. It doesn't mean grow the biggest. It does mean the ones who are able to sustain a leading position, hopefully through their performance and also through their investor relationship management. That really matters over the long run. So I'm always keen to hear what others are doing with that, because I think that it's where the real innovation's happening.
Sure. Well, we've kind of talked about relationships as a key part of what investor relations, right? That second word is really about the relationships you build. I think all those components. I want to talk a little bit more about brand in a minute, but in terms of relationships, I know we've chatted sort of about this transactional version of LPGP dynamics. How do you think about it in today's market? We have this this conversation with someone else around the digital world, but relationships still being analog. You want them to be as one-to-one and as personal as possible. In sort of this new era, sort of post-COVID, when a lot of virtual meetings happen, a lot of things happen, outside of what used to be an on-site visit, an in-person meeting, a roadshow, all these sorts of things. How do you think about relationship building in that context?
It's so interesting because in a world where it's increasingly difficult to tell whether an email response is AI or human generated. I think that means we have to be a lot more creative and find ways to authentically keep the trust that we've worked so hard to build in the first place. And so clearly one way to offer that is a continuation of face-to-face, what used to be, in using your phrase, the analog way of building relationships, which had to happen in the cadence of someone's normal working day in a physical space. And so we've largely returned to traditional LP roadshows and conferences, and these are massive opportunities for everyone if you are efficient with your time, with your outreach, with your scheduling, all of that. Huge opportunities to build real relationships because you can't fake that.
Yes.
and so I think that's really important. It is also valuable to have the Teams, Zoom conversation where you can, but I think being cognizant of the risk of AI generated content detracting from, because it's tempting, you want to use it for as much as you can. And there are so many good use cases for it, but it cannot interpret human emotion. Only you can do that and therefore react to it really appropriately. So we take into account far more than just a probabilistic model of what the next response might be logically. We're taking in a lot more cues to dictate our reactions. And that's really, really valuable. So finding the spaces to create that is essential for ongoing relationship building, while being mindful that now people have more demands on their time than they ever have. Somehow, even though people thought 50 years ago that we would suddenly be in an existence where we didn't need to work so much because so much could be automated for us, we've done exactly the opposite, which is do even more to work even harder. Now, that's enthralling for someone who loves working, and that's really exciting. However, it doesn't always come with the efficiency that you think it might. So just being mindful of those tools that we can use without being tempted into them as distractions is really important.
Oh, that's such a great answer. I think that is dovetails perfectly into what I want to ask you next. But I think more than anything, you give us 8 hours, we will fill 9, right? I think that's
Yes,
generally
exactly.
where we end up with, because this is a business too. I think it pulled me in as you talked about your journey, all the things that you've done, because you continue to get to exercise your mind and be exposed to so many different innovative new technologies, but also interact with some of the smartest people in the world. So I think to your point, be sort of wanting to immerse yourself into this world as much as you can. It does make it challenging to really put some kind of governor on that. But the idea of this new age of AI and even just technology broadly, I 100% agree with you that it has the potential to dilute relationships, but maybe you could talk a little bit about ways that you use, whether it be AI or just technology as a whole, to enhance your productivity, efficiency, or maybe even enhance these relationships.
Sure. I think where it has been most useful in, and for me and my team specifically, in building our way towards making more meaningful relationships, because it can't do the actual relationship building for us, but what it can do is help us create measurable KPIs
Mhm.
and then track them in a very disciplined way. And so we now have access to a near limitless kind of database of real brainstorming potential when you think of the nature of IR, fundraising, marketing, communications. Again, we live in a pretty amorphous world. There's not a whole lot about what we do that's truly black and white. We
Mhm.
have to be comfortable in that space where you're interpreting things and you're reacting real time to the person's body language, the organization's kind of signals on whether or not they're really interested, and how you take that forward in the effort to sort of convert them ultimately into an investor in the fund. What AI and some of the tools around it can help us do is create reliable frameworks using lots and lots and lots of data from what they're probably taking from much bigger organizations than what ours might be individually, and saying, here's how you can track your time. Here's how you can track the number of meetings that you're having and sort of think about general conversion rates of those types of activities. Here's some of the things you can think about to apply for your KPIs in investor roadshows. One of the things I've done is to try to attach a specific level of capital commitment potential to the next fund for each roadshow, to say I want to hit a certain level to make that roadshow worthwhile. And I don't need to know that organization's minimum and maximum check size. I need to know what their actual potential commitment to my fund might be, and therefore what that might drill down to in a total sort of estimation sense. And then aim for that with every roadshow that we go on, to make sure we're using our time really well and that we're using the LP's time well. So we're not just sort of, again, spray and pray, let's see what sticks, and contact everyone and have all the meetings. No, we're trying to be thoughtful and say, I know you, XYZ organization, might be more likely to care about my strategy, and therefore I'm going to share it with you. Let's see if it's a fit, take it from there. And that's where AI and some of the tools around it can be really helpful. And yet there's still just an approximation towards what you might ultimately see in terms of, convertibility into the fund. Because what really you have to be, again, very organized with is that kind of LP by LP appraisal. And that process is something that needs a lot of human engagement to measure and monitor. But the frameworks around it, I think, can be really useful. And AI is excellent and so unbelievably fast. I mean, it still blows my mind how quickly you can get access to some of these things and just have a template to start from. And for a lot of people, that versus a blank page is tremendously valuable, because then you edit and refine and tailor it to what you need, but you have a starting point.
Absolutely. That is really where I think you putting the two sides of where can you spend the most finite resource, your time, in the most valuable and productive way, is really where I keep coming back to folks. And I joke, is like the number of AI generated decks that I receive now, that's probably not the way you want to go about it. And when I'm seeing the same language in, the way folks are pitching, you still have to personalize a lot of this. And I think you alluded to it, is we used to do this manually, right? You used to have a meeting, you used to scroll down your notes, you'd put them into a system. Probably wasn't queryable. We're not old, but it's not that long ago that we had these tools. But I feel like those are the types of things you can't lose, the raw activity level of having this conversation. I now can record this conversation. I can put the notes into a database. I can search those when I'm on the road from any device. Like, those are not mind-blowing type activities, but the amount of efficiency gain that, as a small team managing all the areas that you're managing, I'm sure that comes into your daily life and you're looking for more and more ways to leverage those tools.
Definitely. And I think the next most important question is, it's step one, how can we use this in an appropriate way? We have an internally proprietary AI engine that allows us to fully integrate all of the files and things in our own system. And it uses all of the, the LLMs that are out there to build the chat GPTs of the world. And yet it's closed off. And so obviously with sensitive information, it has to be for us within the firm, but it's extremely valuable for us to be able to comb through everything internally and help ourselves organize. But the next question, and exactly to your point on the efficiency gain, what do you do with the time you have saved? And are you really being disciplined about what that frees up for you in terms of mind space? Whether in our roles, it's really important for me to dedicate time to think and to be really strategic about how we need to be planning for the next phase of our firm and our growth and our next fundraise and all of that. And if I don't have that time, I'm not going to be as effective. So it's really, how are you using that time that you've now saved because you have access to these tools that can make you a lot faster at some of the administrative tasks that used to take all of us a lot longer to do.
Absolutely. Well, I guess one place you can use that time is thinking about brand, right? The title of this series is Raising the Brand, and we haven't touched on it yet, but I'd love to know, given, again, all the areas that you touch, how do you think about and define brand in the context of private equity, and what does a strong brand enable you to do in the market?
I think brand is essentially what distinguishes you from someone else. So it's your set of unique characteristics that make you as a firm special. And then again, honing that a bit, identifying what your distinctive brand assets are, shaping and reshaping them if you need to, and then really finding the right megaphone to bring to them. And not in a way that is inauthentic to the channels you are targeting, but exactly the opposite of that. It's amplifying in a meaningful way the message that your brand brings to the audience that is most likely to care about it. And so you've got to do a lot of work around what all those pieces are. What is it that makes us special? What is it that really makes us unique? That means we need to look in the mirror and be really honest with ourselves, first and foremost, be really clear about what our strategy is, how we do it, who we are as a firm. We also have to look at the rest of the whole market to figure out how we're different. Because what if firm ABC over there says exactly the same thing that we just said? Then that's not very distinctive. Or is it that we do it in a completely different way? And I think there's so much space for firms in our industry to prove that differentiation. And LPs are extremely astute to the differences, subtle and not so subtle, between firms, and they're exactly right to focus on it. Because if we don't have a good answer to that, as we've discussed before, no LP ever is obligated to come into a fund that I might be raising for my firm. There's no obligation for them to come in. They don't have to make that commitment. They might really want to, and I hope that they really want to, because they're thinking of the things that make us different and unique and additive to their portfolio. But that's our job, to do that and to make that message really, really clear so that you find your fit out there in the market. And so with brand, I think it is both the intangible aspects, i.e., the not scientific, I can point to these numbers which equals our brand, but the things that you remember about who we are and the things that come to mind if you are asked to describe Epiris, describe the strategy, describe what you do that's different. We had actually embarked on a third-party LP perception study this year, which was extremely valuable. And one of the questions we asked was, of course, for this group of LPs who were all contacted individually across geographies, across institutional types to get a real cross-section of our LP base, how would you describe Epiris' strategy? And it was incredible, the consistency of answers that came back from that, which is really encouraging because it means we have locked in on something that we believe we do well and that we intend to keep doing. And that's also what LPs hear from us and what they see from us. So making sure that you wed those things and also continue to refine how you do it is essential to keeping your brand relevant for the audience that's relevant.
Oh, it's so true across all the board. I think for one of the things that I would always say is, as an LP, if I'm an investor in your fund, I should be your biggest advocate. I've made the decision to put dollars behind it, but give me the message that I need to send out to the community and be that vocal advocate to help drum up more interest and get more awareness. So in some ways, brand is storytelling, right? It's about what message do I get from you? How do you talk about it as the GP? And then how does the LP receive it so they can then go echo that into the ecosystem? Would you agree with that in terms of storytelling and how you think about that?
I think that's an essential piece of it. Absolutely. And I think that, again, you don't want it to feel like you have your sales hat on. At least for me, I'm very allergic to that. And so I try to put myself in the LP's shoes and think the last thing they want to feel is that someone is sort of selling to them. And so that's where I think you exactly pointed out. Storytelling is just how you weave together distinct bits of information and data that are important to you, to your firm, to the message you're trying to get across, and you're making it compelling enough that someone finds it worth listening to. And on top of that, not only do they want to listen to it, they want to remember it so that they can write it down so that they can go do something with it. So you have your, within that brand, within that storytelling, you also have your sort of call to action, which if you're doing it really well, starts way before you actually need any action. That's the point. So the best of the industry and the people I see doing what we do so incredibly well, it's because they view it as the long-term game that it is. You know, for us, the next fund starts the day the last one closes, because you now have the opportunity to prove to those investors who have chosen to partner with you that that was a good decision, that you will serve them well, so that they will want to continue that relationship. That starts the very next moment, and you have to keep proving it all the way through. Equally, if you have the great fortune of being able to build new relationships on top of that and bring them in too, then you're doing that throughout as well. But it doesn't, you know, gone are the days where you can just sort of press the magic button and start a fundraise because you've decided it's time to, but you haven't done anything since the last fundraise, right? And thankfully, the industry is coalescing very much around that. So it's much less common now for that to be the mode of communication that GPs take. Nonetheless, how you engage in that off cycle, in the in-between, and further your brand resonance and in the market that it needs to sort of self-feed as well is really important now.
Yes. So Kathryn, a shameless plug for us at Private Equity Marketeer, but you might say you'd always be fundraising. So
absolutely.
Well, perfect. Well, I think this conversation, you've provided so much great actionable advice to folks, but I'm curious, if you were advising a first time IR hire at a new or emerging GP, what would you tell them to prioritize as they go in there and think about building sort of this modern IR function?
I think it comes down to reinforcing the value that IR brings to the table within the firm and being really clear about the deliverables that prove that. It's very easy to attach the fund that's raised to the IR team that raised it, with or without a placement agent or any other support that might be there. That's a very easy metric to see the efficacy of those efforts. However, that's one very brief moment in time in the firm's life cycle. So there's a lot more time, unless, you know, you're a huge multi-strategy platform that's raising something every 10 minutes, in which case it's a different kind of intensity and value proving that you have to do. But if you have that cycle of time in between funds and products and all of that, then it's what you do in those in-between times that matters a lot more and will offer the opportunity to be better the next time you come around to the fundraising moment. And so think about the metrics that you as an individual or you as a team offer to the firm that will prove your value, and be really clear about those, and be really honest with yourself when you hit your goals and when you don't, and how you measure yourself during the whole cycle of a fund and a fundraise and the in-between and all of that, and how you act as a service center to the firm, because it is very much my opinion that one of the greatest things we as IR professionals can do is make someone else's life easier. We are here to help. We are here to give you information. We are here to help the team. We are here to make others happy by what we do. This is one of the gifts of being focused on the human relationship building that we get to do. And it's an incredible gift to be able to do that. On top of that, it is really high stakes what we do. It's really important. It's very intense. It's not for the faint of heart. And those are all thrilling aspects of what make a great IR professional continue to learn and be even greater next time around. And so think about how that all comes together and how you are furthering the mission of your firm, your organization, the culture that goes with it, and being a real, banner bearer for that.
Mm-hmm. That the idea of service to not just your firm, but to your constituents, it is a role that is oftentimes thankless. It's being pulled in many different directions and serving different masters. But if you keep that service mentality at your core, I think you will continue to do that. And you're a shining example of that through your career, Kathryn. So really
That's very
great.
kind. Thank you.
Yes, but it's great to get all this information. So as we come to the close, we always ask folks our bonus round questions. So the first one is, what is your favorite brand outside of finance?
Steinway and its cousin Boston, which make the best pianos I've ever played.
Interesting. And maybe I'll segue from that. Who is your favorite pianist of all time?
It's such a hard one. And I'll blend it actually with composer and say Beethoven, because I think that the depth of emotion he was able to conjure through music and the representation of human struggle and triumph through adversity is just incredibly, endlessly inspiring.
Amazing. How about a buzzword you'd like to get rid of in the finance industry?
How about close the loop? Number one, what does that really mean? Secondly, if you need to close out a thread of conversation, then just get it done and don't talk about getting it done. Let's leave it at that.
Yes. Action versus words, for sure. And the last one, you've given so much good advice already, but what's one piece of advice you'd give to your younger self entering the industry?
I'm really passionate about this one. When you feel imposter syndrome flaring up, don't try to ignore it. Use it. And my current favorite author actually is a woman called Alison Fragall, who I probably mispronounced that name, but she wrote a book called Likeable Badass. And in it, she highlights the importance of recognizing when you feel imposter syndrome. It's really signaling that you recognize in yourself a desire to grow. And so if you embrace that as a positive challenge rather than inwardly destructive, negative impact, you can use it to your advantage and you can use it to grow. And at the end of the day, growth happens through struggle, not through things being easy. So you should embrace the struggle.
It's great. Well, I love that advice for folks. And as I said, all the pieces that are woven through this conversation, I always learn something through all our conversations, and just appreciate you spending the time sharing it with our community. Couldn't be more grateful.
Right back at you, Matt. Great to be here. And thanks so much for this.